Okay, hey everyone. Well, hey, no surprises. You're going to be able to guess what this video is about. I'm telling you, this video got some amazing, incredible information. On my channel, I don't tease. I don't give you a bunch of BS. We get right down to it, something that's useful, something that really, when after you watch it, you're like, I learned something. I can use this. And today, I'm going to tell you about number one Bitcoin secret that no one is telling you about. Number one Bitcoin secret no one is telling you about. Well, before I do that, got to do my usual disclaimer, which is that this video and any of the content put out by my company, ATG Digital Media, is not investment advice. It represents opinion, information, engagement, entertainment. Past performance does not equal future results. Hey, there's uncertainty in the market. Nothing is guaranteed. Errors, mistakes, oversights, they happen because, hey, me and my team, we are human beings, and all that comes with the territory. Capital loss is a likely outcome. In other words, if you choose to act on anything that is in any of our content, including this YouTube video, and you lose money, hey, you have to consider that before you act. Any operation in financial markets, whether it be trading, whether it be speculating, investing, comes with this possibility, which is that you might lose your principal. Finally, I, the owners, contractors, employees, associates of ATG Digital Media, own, trade, transact in the investments that are mentioned in this video. And for that matter, all of our content, whether it be Twitter, our updates, Substack, all of the above. All right, let's get to it. Leave the mention for ATG Digital Media, my ad, which I usually put somewhere later on, because I want to get to this because I'm really stoked to tell you about this. So getting right down to it, Bitcoin is about to go through its halving. It used to be called halvening, which I liked better. It sounded more mystical, but apparently the term now is halving, and it happens every 4 years. And we've seen one in 2012, 2016, and 2020. And every 4 years is kind of like an estimate, but it's really about because Bitcoin is a algorithmically driven currency, it actually happens every 210,000 blocks. Remember, Bitcoin is mined using an algorithm, and there are blocks that are mined, and there's a reward for it. And the halving, as I'm about to tell you, essentially halves that reward for Bitcoin miners. Now, what you'll be more interested in, and which is really the subject of most of this video, is that halvings drive price behavior. And I'm going to show you using a chart, my analysis of this. And thinking about this and studying it and researching it, in my opinion, in my judgment, it's because it creates this supply crunch and a short squeeze. Because after a big peak, there's a lot of people that are short, and they often are not really paying attention to things like halving, which is a kind of technical thing that only people that are very informed about Bitcoin understand or even know about. I would venture that the vast majority of people, if you went and asked them and you say hey, what's the halving? Do you know what it is? Do you know when it is? Do you know what the impact is? They're gonna be like, halving? What? Halva? What? They're not know anything. I tell you that. Because most people are really trading Bitcoin or even holding Bitcoin either based on pure faith, which is fine, or they're trading it using technical charts where they're drawing lines and stuff. And in my opinion, that's all really not what matters. And I'm going to show you what matters. So in the current halving, the miner reward for mining Bitcoin is about to get halved from 6.25 coins to 3.125 coins. That's half, just in case, that's not clear. And as it's currently stands, it's supposed to happen in April of 2024. Now, there's some shifting because remember, it has to do with the number of blocks that are processed. So it's when the next 210,000th block is processed, that's when the halving happens, or the halving happens. That's such a difficult word to say, halving. Can we just please go back to halving? I really would prefer this. So I went and studied this, like in some detail. And halvings really drive price action. I mean, all the price action seems to be driven off this halving. So I'm not going to go into 2012 because that was the very first one. And so, Bitcoin essentially begins in, I think it's in like 2008. So the first halving, it's hard to generate these numbers because actually there's no price record that I can find of it, but we can see it very clearly in 2016 and into 2020, which is that the bottom happens about 18 months before the halving date, where Bitcoin price makes the low. And then what you can also see, and these numbers are approximate, right? I mean, they're not like exact to the day, but approximately 18 months after the halving, you tend to also get the high, the top. You can kind of see this. All right, so let's go to the price action from previous halvings. Let's start with 2016. So the bottom happens in January of 2015. I'm going to put up a chart after I go through this very quickly that will let you see that. Dean, I will cue you when you put that up. For now, we're just going to put this up. The bottom happens in January of 2015 when the price is approximately $158. Then the halving happens in July of 2016 at a price of around $670. So that's about 4 times, or about 324% higher. And then the top happens about what? Almost 2 years later in December of 2017 at $19,870. Remember that first high? Like that really got everybody's attention. And so I put from top to bottom. I meant to say from bottom to top. So we just need to reverse that. From bottom, it was up 125 times, or 12,475%. Like if you bought at the low, sold at the high, that was the gain for the 2016 halving cycle. All right, Dean, put up that chart for like 2 or 3 seconds so people can see it. And you'll see that the green represents the low, the black line represents the halving date, and the red line represents the top. And so if you just look at it in some detail, stop the video at some point in time, go and look at it, you'll see all of these very clearly marked in this video on that chart. And then let's go then to the 2020 halving. Halving. So the 2020 bottom happens in December of 2016 at about 3,000. I believe that should be 2018. That's a mistake. That should be 2018. So it happens at about $3,169. And then that on the halving date of May 2020, Bitcoin's up about 173%, or about 2.7 times, the low price. Then finally, the top happens in November of 2021 at $68,978. So again, from bottom to top, ignore this, 22 times to 2,076%. All right, before I go on, I want to mention this is an ad for my company, ATG Digital. That's the website, atgdigital.media. We have paid subscriptions that begin at $9.99 per month, $9.99 per month, where we focus on things like Bitcoin, Ethereum, Dogecoin on the crypto side, other crypto, innovation and growth stocks. And what you get is stock picks, crypto picks, market strategy, commentary. And if you want to sort of like get a taste for what our subscriptions sound like, you can check me out on our Substack, where I'm at paulmampilli.substack.com. The Substack is 100% completely free. My amazing colleagues, Dan and Dean, actually write up various stocks. I've been writing about crypto recently, but if you want to get a sense of like, what do we focus on? How do we focus on it? What's our angle? What's our strategy? What's our viewpoint? A taste of the kind of stocks that we're in, crypto that we're in. Check out the Substack. If you've been at Banyan Hill and you want coverage in the way that I used to provide it, check out our subscriptions, atgdigital.media, starting at $9.99. Many folks have said that previously in my old videos, it sounded like it was $999. Yeah, I mean, $999 per month. Yeah, I mean, we'd swimming in some serious dough, but $9.99 per month. All right. Okay. So let's get down to business. 2024 halving, based on the previous sort of analysis and research, it suggests, and remember, this video is opinion, information, engagement, entertainment, not investment advice, suggests that the bottom was in November of 2022 at $15,480. And the halving date is coming up in April of 2024. So at this point, it's less than 12 months away. So if you go back to the previous two cycles of halving, between the bottom and the halving date, we had moves of something like, it was like, I rounded this down to 150%, but it was actually 170%, and it was a little over 300%, but just for round the numbers, I said 150 to 300%. So at 150%, it would suggest that April 2024, Bitcoin price could be 38,700. If it went to 300%, it'd be $61,920. Now, is that like a guarantee? No, it's based on the last previous cycles. And the truth is that there's no real precedent. Yeah, the only two precedents are the previous two halvings, but does that guarantee that that's all it could be? You know what? It could be lower. It could be higher. Obviously, in the 2016 halving, it was 320%. Could the next one be 400%, 500%? It could be. There's no real basis for like this. I mean, remember, the price for Bitcoin is set by supply, and it's also set by demand. I laid out that the supply is about to be halved in terms of new supply. So Bitcoin miners are only going to have 3.125 Bitcoin every time they mine in the future, starting April 2024. So we're in the last, 10 months where you get 6.25 Bitcoin. So the supply is set to shrink fairly quickly. And then, where will the next top be? Well, here's where, this discussion about, demand versus supply really, begins to matter. Let's just talk through this. All right. Bitcoin demand and supply. Well, if I analyze Bitcoin demand, in my judgment, Bitcoin demand is much higher now than it was in either 2016 or in 2020. Why? Well, I think there's more appreciation for Bitcoin, which is that its supply is finite and absolute at 21 million coins. You can find lots of articles about being able to carry Bitcoin essentially on a zip drive on your phone. In other words, it's incredibly, low cost to store on a phone or on a zip drive on your computer. You can take it anywhere. It's very portable. It's inherently digital and portable. And if you want to send Bitcoin, from here around the world, any amount, it's just Bitcoin. So you can, the cost of it is nearly nothing. It's no different than sending a message or an email. So its cost is negligible relative to the banking, fiat, finance world where, to send big money, you're going to have to give them a 1% or I don't know, 0.25%, some huge amount of money. Bitcoin costs almost nothing. So that's a big deal. Then the last thing is that Bitcoin is divisible to 8 digits. And that means that we've got 2 or 3 regions, countries that are adopting Bitcoin. And I would argue that there are also places with very high inflation that essentially are on the Bitcoin standard. So we know that El Salvador, as takes Bitcoin as legal tender. I believe it's the Central African Republic. Now, these are fairly small, but nonetheless, if you go through lots of places that have seen very high inflation, you find that many things are being traded for Bitcoin. And so these 8 decimal places allow countries around the world to price the same product at different prices without having to make change or without having to do any exchange of any kind. So maybe you're going to buy a Coca-Cola in somewhere in Asia, and maybe it's going to be for 1 sat or 10 sats. That's like the equivalent of like cents in Bitcoin. So that flexibility is allowing for adoption of Bitcoin in many different places. So that's more desired now, especially when you consider some of the other factors, more macro factors that are in play today, which is that we've seen over the last 2 or 3 years, as a result of COVID and all the interventions and actions of government, people are more wary of inflation than at any time like in recent history. So that absolute finite amount really comes into play a big deal. Then there's a lot of controversy around the dollar's reserve status. People are questioning it everywhere from Saudi Arabia to China to countries in Africa. Like, why do we need to keep buying the dollar? Many people will be looking for an alternative to a reserve currency that is not issued by any country. In other words, where nobody gains any political advantage by issuing their currency. And so there is definitely this deep desire for a decentralized, non-sovereign currency. So that tells me that the demand for Bitcoin in this cycle is going to be higher. And just to take a step back to 2016 versus 2020. In 2016, we had that 125x move. Why was that 125x versus just a much more modest move from sort of 3,000, let's say 200 to 69,000? I mean, like relatively modest. I mean, it's a huge move nonetheless, 20x, but 120 versus 20, like 6 times, why was it greater? That's because in 2016, in my judgment, that was like the coming out party for Bitcoin. It's kind of like many people had known about it, but they were like, wow, I mean, that's incredible that it can, become, this currency that is known around the world that so many people want to buy and willing to pay. I mean, nobody could imagine people willing to pay nearly $20,000 for a coin. And right now, even as we stand, Bitcoin is trading for nearly $27,000. So clearly, one of the big things that drove that 120x plus jump in 2016, that 2016 cycle, was that demand push. In other words, people willing to come in and buy rocketed higher, and Bitcoin is still higher than that price. In this cycle, will we see another explosion of demand, sort of like the next level where it becomes something that so many more people come in to buy? And if that's the case, well, I mean, 120x from the low of 15, well, that argues for a price of something like 2 million, 3 million. I'm not saying it's going to go there. I'm just saying you can model it and say, hey, let's say, after the 2016 cycle, a lot of that enthusiastic demand has been sucked in. So of course, in the 2020 cycle, we didn't get as much of a move. But maybe the next cycle we see way more demand come in from all around the world. And maybe it's 30 times, maybe it's 25 times, maybe it's 50 times, but it's 50 times from what? $15,000. We're talking about $1 million territory. I'm not saying it's guaranteed. I'm just saying, if you think about this logically, there was a reason why there was a 120x move in 2016, which is that massive demand push, almost never seen before. Now, if we have another moment because of all the things that have happened in between now and then, which is that, we've got a lot more people wanting to buy Bitcoin. I mean, who knows? Who knows? let's just go through Bitcoin supply. Max number of Bitcoin, 21 million coins. Already mined 19.4 million, which is 92, almost 93% of all the coins that are ever going to be mined have been mined. So this remaining coins left is like what, 1.6 million? So it's a tiny, tiny number. And one of the things that you can see that has been happening between 2016 and now is that there's a huge number of coins that are just being held. In other words, people are just what's called hodling them, which is like, a crypto term for just essentially holding on to them as a store of value, kind of like the same way that people hold gold. They're beginning to hold Bitcoin. And with that many Bitcoin just being held, when big demand comes in, how much higher can it go? I mean, well, we know what the previous sort of like, two sort of segments are. Into a period of very high demand where people are just like really want to get in 120 times from the low. After that, of course, there was like, some moderation of demand. But I would say that in the next cycle up, we're probably likely to see like another big demand push. If that's the case, I would estimate something like, somewhere in between 20 and 120. You take your pick. Either way, it's a very large number. And in hindsight, we're all going to wish we owned a lot more Bitcoin, way, way, way more than we currently do. All right. Thank you all for watching this video. And I'll be back next week with another one. Check into subscriptions from atgdigital.media. Check out my Substack and come back next week. This is Paul saying bye.